This is the second day for our event, Innovate 48 Partner Edition. And my name is Prashant Mane. I'm Director of Client Relations at FIS and strategist behind the IN 48 Partner Edition. It is my honor and pleasure to be hosting this event today. I'll just summarize quickly our journey that we took yesterday and the continuation that we're going to have today. So we started yesterday with the opening session from FIS about what is FIS, what is the innovation ecosystem within FIS. And then we took that to the areas where FIS line of businesses were introduced. These are the building blocks that you should understand, the terminology you should understand. And the key reason why we conducted this LOB session was to make you understand which building block within FIS you fit or you may be related to. And that essentially will be foundation for the future journey. Now, post that, we conducted the FIS Developer Experience Workshop, which essentially gave you an understanding about how your technology stack or your product or solution can integrate with various FIS building blocks that you identified in the first session. And that gave idea about what catalogs we have, how exactly to interact with those catalogs, how to get help, how to get access to those, etc. And I'm glad to say that all the participants will have full access to the documentation for FIS Code Connect, which is our banking and payments API, and our developer program, which is our merchants API. All the help and access documentation will be given in coming days before, well before the actual event, which will be on 26th August. Then we went into the FIS strategic innovation programs and beyond, where startups understood about how they can get guidance, network connectivity of our clients, funding, as well as alliance partnership within FIS network. And after that, we had a deep dive sessions into 3 tracks where we had digital assets, data innovation, and AI and fintech. Today, we will be continuing this journey with our keynote session with Sopnendu Mohanty. He is the Chief Fintech Officer at Monetary Authority of Singapore, followed by a dedicated and in-depth session about identity. We have seen yesterday that this is the foundation. Everything starts with identity, it links the data, and that data essentially either by consent-based mechanisms or by aggregation is then available for next innovative things with AI as well as federated learning and other models that we have seen yesterday. Now, based on that foundation of identity, we will venture into Web3 Wonderland with Polygon, Hedera, the investment community, Earth ID, and post that we have wonderful sessions of workshops planned from Hedera as well as Earth ID about identity and how Hedera Fabric can be used. There are certain surprises or special offers from Hedera as well as Earth ID waiting for you for your startup as well as an individual. Post that, we are going to have ending session, which is global fintech landscape from the industry leaders, and that's how the second day is planned. Now, I'll start with the introduction about our keynote speaker, Sopnendu Mohanty. So Sopnendu Mohanty is currently the Chief Fintech Officer at Monetary Authority of Singapore, and he's responsible for creating development strategies, public infrastructure, and policies around technology-driven innovation. Mohanty has over 2 decades of public and private sector experience in technology, operations, digital finance, and investment strategies. Mohanty extensively engages with global technology and financial services ecosystem and has championed notable collaborative public goods like API Exchange, APIX, Singapore Fintech Festival, Payments Rail, Data Exchange Program, and experimental programs like UBIM. In addition, Mohanty advises many international global advisory bodies on fintech, innovation, and inclusion. Within 5 years of his leadership, Singapore has become leading global fintech hub, producing unicorns and home to many vibrant fintech companies. He has co-authored several patented works and applications of digital technology in finance and won many industry recognitions. With that, we'll start our keynote today. We have certain areas that we have divided the discussion in. Let's start with the regulations in general first, and welcome Sopnendu for this event, and thanks for your participation today. We are very lucky to have you as a keynote speaker today. And the first area, Sopnendu, that we would like to know about is MAS and innovation. So what is MAS doing on innovation space? And probably if you can set some context and background about the history, current state, and future, that would be great. Over to you, Sopnendu.
Thank you. Thanks for having me. And it's quite encouraging to see a lot of this ecosystem build-up is happening, and FIS playing a big role in that. On a question on MAS, I would say MAS' own journey in promoting innovation has been in a very different, I'll say, multifold approach, both from a public policy standpoint and promoting infrastructure development and initiating partnership with different regulated entities in terms of getting them to pick up proof of concept and pilots in different what we call as an asset class in the financial services. We have a whole range of policy stance when it comes to technology being used to reimagine financial services, whether it is lending or whether it is capital market or whether it's insurance or it is trade finance. So there's a whole set of, including digital currencies and other emerging area in the green side, the ESG side. On the public infrastructure side, we focus on public rail. We focus on what are the foundational infrastructure required for any tech-driven financial services to rely on as they build applications, innovation for customers, and come with new products and services. So examples to that would be putting the pay now infrastructure for moving money domestic network efficiently, or it is SG Fintechs where different banks can access each other's customers' consolidated data through that exchange, or much more downstream supporting programs like Business Sans Border, where we talk about small business, medium-sized business, access to digital finance, access to digital solutions through a platform. And of course, broadly, we also supported a platform which allows people to showcase the solution on some kind of public sandbox where test you can hack stuff, you can access APIs, you can build product and do many things with the platform called API Exchange. So there are many examples of public rails or public platforms we put primarily to facilitate innovation where we feel strongly that there is a collective interest for the public good to make things work. And perhaps we as a state are more incentivized to support such initiatives as against a particular bank or a particular tech company would do. Having said that, people do in some market, they do intervene, but generally speaking, it's not the case in many countries. And the third aspect is where we pick up a very specific area of interest to us, where both the tech and the finance are still in early stage of development, where there are still issues which are not clear. Business opportunities are not that straightforward. There are issues which are to be articulated and handled. Things like digital assets, things like building application on DLT network, things like decentralized finance. These are the emerging areas where there are a lot of promises, but there are a lot of issues and of risk which comes along with that. There are business model issues, there are tech issues, but we look at promoting that particular sector through a very careful, calibrated experiments. And a good example to that would be Project Ubin, which looked at applying DLT technology for cross-border payments. The other example is what recently we launched in the Project Guardian, which looks at different tech framework which we can establish to build decentralized services for the banking sector. There are some examples like Project Nova, which look at the ESG opportunity. There are Project Veritas, which looks at an open source code which allows banks to use, I mean, even tech companies to, when they deploy the AI solutions, can they use the framework for a fair, accountable, what we call a fairness, ethics, accountability, or a responsible AI. So how do we ensure the code are actually conforming to this framework of FEED principles, fairness, ethics, accountability, and transparency. So there are this other upcoming quite a edgy in many sense. It has no clear directions yet, but we kind of get people to work on that so that there's a careful, calibrated innovation pathway to see some light on those new areas. So that's how we look at innovation and how does MAS plays a role, with some examples which I shared with you.
Thanks, Sopnendu. So this is about the MS as such, and recently I've seen a lot of cross-border regulatory collaborations as well as cross-bank collaboration. Instead of competition is cooperation, and competition at both same side. So can you give us your view about how the collaboration between various regulators happening, and within APAC it is promoting the innovation, and what are the key initiatives that you see as of today which you believe will be the kind of a key to the next fintech evolution?
Well, that in one level it may sound that if you are going to online and tracking some of the news, you may see a lot of collaboration being mooted between two parties, whether it's between regulators or between regulators and institutions. All these are essentially an intent to work together. But the path to get to a point where this collaborations lends to some breakthrough collaborative product and services, there is not much evidence there. What we tend to do particularly is we try to we look at the market need. If certain market we want to collaborate and there's a real market need for a certain kind of different thinking, then we establish a purpose, and then we establish an objective for both the countries, both the countries that will get out of it, and then we pursue some collaborative cross-border initiatives. Good example would be solving the issues around trade finance between countries. Small and medium businesses would love to find common marketplace where they can share, the buyers and sellers can exchange information, and they can find financing at both the end. And there is some level of transparency required from a public policy standpoint as the goods and services go through a global supply chain. So there you bring a much more collaborative network policy at the both end. Some state help in facilitating discovery process for both sides of the entities. And then you see so that's the kind of collaboration which I think is more pragmatic and more useful. Similarly, payments. There are many collaborations between banks, fintechs, between state and governments around cross-border payment. Some are exploratory, but some have gone and established a real connection. For example, Singapore and Thailand connected their domestic payment system, then which allows us to really move payment in a very different way as against a complicated SWIFT system. But that led to creation of further bilateral connectivity, and Singapore is connected to India and Malaysia this year. But these are all where collaborations brings connection of rails, and hence fintech on top can build application to serve countries across the border when it comes to moving money. So I would prefer to characterize this whole collaboration into output based, and then you can figure out some are intent, but some are actual implementation.
Thanks, Sopnendu. So with the foundation of MS innovation, as well as the specific areas or potential areas that you see with inter-country regulatory collaborations, the next question is about how the startup ecosystem is flourishing around these areas in Singapore and in overall APAC. To my understanding, Singapore is a startup nation now, and it is a gateway to APAC. And I'm sure there are so many funding programs which are promoting the innovation as well as the startup culture in Singapore. So I'd like to get some views about that, on how the Singapore ecosystem around the startups is flourishing. What are the key observations that you have? What do you still see as hurdles? And kind of an overall view about that will be really great.
Well, in Singapore, historically has been very pro-innovation. I think it predates me in many ways. We have very, very progressive agencies like Enterprise Development Board, Enterprise Singapore, and IMDA, GovTech. There are a whole set of agencies in Singapore who have sectorial, also there are many sectorial agencies like MAS, who do have a set of policies to promote innovation, hence startups. It comes in from forms of grants, licenses, supporting projects, proof of pilot project. In some extent, there are grants which supports even large-scale infrastructure deployment, which a certain startup wants to initiate. So there's a whole set of what I call as a regulatory or policy signaling capital, which typically comes in form of grant, proof of concept funding, pilot funding, infrastructure funding, and that goes into this innovation space. There's also a whole set of policies to facilitate to setting up these businesses, businesses in Singapore, and there are a whole set of business-friendly support which the country provides to startups. Typically, startups in Singapore or startup coming from overseas to Singapore look at 2 or 3 things as an opportunity. First thing is it's a comfortable place to, if you are thinking about an Asia outreach. Easy to move around, easy to operate out of Singapore. Much of the countries are within 5 to 6 hours of flight and well connected from Singapore. This one, from a location perspective, it is much more centrally located to do business around this market. Second, Singapore is a very huge, vibrant financial center. It has access to capital is a lot. There are a lot of capital from private capital, VC, investment capital, banks own venture fund. There's a whole lot of capital formation is in Singapore, plus the government support in terms of POC pilots, grants. So you take all this capital, Singapore is the second advantage you have is accessing this capital. Third, if you are in a regulated industry, you've got to have regulatory policies which supports and facilitates such innovation. So MAS has its own regulatory policy, as an example, which is kind of designed around supporting innovation, risk-taking, early stage uncertainty, helping them to be part of an ecosystem, whether through association, through programs, through connections. So they build that whole connectivity as you build the solutions and you're pitching to your client. Fourth, access to talent. We put a lot of effort in ensuring that the startups have access to talent, because but keeping in mind Singapore is not a large place, so we still if you're a mid-size and large-size tech company, you do depend on resources outside Singapore, but we facilitate the critical resources you need to have near your headquarters if for the expansion. So that's the, and then there are many colleges who have programs to support startups employees skill set. Beyond this, I think generally speaking, I would say Singapore's many sector have almost like a tightly run programs. If you are a fintech, for example, you are part of Fintech Association. You are part of the Singapore Fintech Club. You are part of many committees which drive different aspects of financial services. So you influence some choices policies are going to render by providing that input. You also have a huge platform called Singapore Fintech Festival, perhaps the largest festival in the world, where you can showcase your product, showcase your value, and so that you can stay competitive and you don't have to spend money in traveling all over the place to showcase your product. One single event does give you access to 130 plus countries in terms of product placement. On top, we have this platform like API Exchange, where as a digital, you can reach to hundreds of countries. You can connect to a potential client outside Singapore. You can do a full dev. There's a full dev environment where you can do your product demos. You can do a small POC right off the platform, so that you don't have to spend a lot of money by first when you're soliciting client and building your sales pipeline. The platform becomes your gateway in terms of accessing other market and getting other market to work on you with you remotely. And lastly, I would say any emerging risk, any emerging challenges, the response time the government has to such issues are relatively faster. There are principals from different sectors who are kind of champion behind that, and you reach out to them easier in many cases. So I think that's, I would say, broadly where how startups get benefit operating out of Singapore. Of course, we have strong IP protection and all this thing comes with the strong legal systems which protects vulnerable startup from IP violations.
So a subsequent question to that, we saw the MS innovation, we saw the overall collaborations, potentials, and etc. And now we're discussing about the fintechs and evolution of that. And one of the interesting areas that the questions keep coming from the participants what are the RegTech innovation areas that you see, and some of the interesting examples that you might have seen recently within APAC and Singapore specifically?
Well, RegTech, which is to me a subset of the broader fintech, because fintech has wealth tech, payment tech, infrastructure tech, green tech, and I think one of the subclass I would say wealth tech. Now, intuitively, RegTech is something I think market should look as a demand, and there's no doubt about it that market has this need for RegTech, and the RegTech kind of addresses the regulatory uncertainty in many ways. And I think there is a subclass out there. There's Soptech, with the supervisors using how to monitor the regulatory entity. And there's a RegTech, which talks about the banks and own compliance obligations to the market, and how do you automate, how do you make the process more efficient. Plus, there are also internal control within the firm, which can be automated and managed through some software deployment. Now, it looks to me a real problem to be solved for. Few challenges which I have observed is that there's a deep reluctance, I would say, for adopting third-party solutions within this banks, because banks are typically entrenched with large proprietary core banking systems or core systems. And when there is a requirement to automate a RegTech requirement or a compliance requirement, it is that core banking or the core vendor software tends to customize and upgrade like a cookie cutter, or only for that instance will do something to make it work. It is from a mental construct, it seems to be simple. It seems to be the logical way to do things quickly. Typically, banks, a CIO, when you ask them, 40 to 50% of their work, internal work items will be compliance related. And they're quite happy with this thing. All they will do is take the requirement, pass to a vendor. The vendor puts a bill behind it, and they do a minor update, and they're done with it. But I think the real approach should not be that. I am not a big believer of banking software companies doing patches within the institution to solve a unique compliance requirement. That's a bad idea, which I think is still festering in these companies. What ideally should be done, that the core banking or the core software provider should not indulge in these things. They should continue to focus on the core services. Rather, they should build a necessary APIs and pipe and source third-party RegTech company who are solving this issue far more efficiently than the core system provider themselves. And I think that's the shift which should happen. And if you don't make that shift, you tend to continue in this path, in almost like I feel like you look at the systems within the large bank, the compliance change requests have made them look ugly and look completely disformed, as against what originally the software company deployed. Hence, I don't say intuitively, I say intuitively is a bad idea, but looks easy to implement. So that's my focus, is to build a pipeline of RegTech companies, not only in Singapore, but for Asia globally. Encourage the banks, I'll rather say not a bank, it is the software company like FIS and Pinnacles of the world, who should have that mental discipline to not to indulge in doing a patchwork of compliance. They should partner with this RegTech company and provide this as a value-added services to their client. If this mainstream software provider can have the discipline and the control not to overindulge in patching systems, I think we'll have a path forward.
Thanks, Sopnendu. The subsequent question to that is, now that we discussed you about RegTech and the role that startup should be playing, and role the institution the bank should be allowing them to play, what are the enablement miles or key structures or frameworks like regulatory sandboxes that we have, and what do you think is the adoption of that, the benefit of that, and hurdles still that And not just in Singapore, but in India also, we have IFSC, which is coming up with the unified regulatory frameworks, and they're trying to promote those things. So how do you see evolution of the enablement framework for startups to participate into this innovation? And what have been the key highlights that they should be focusing, like sandboxes or any other initiatives that will help them to understand and position themselves in the market correctly?
Well, I mean, let me reframe the problem statement. The problem statement is, I think many people are doing many things, but the sector is still struggling to adopt innovation. And if we want to break this problem statement, I think let's try to break it in multiple ways. And one of the ways we can always take is take the approach of the core banking as a stack. And I prefer that way because every bank needs certain core banking or a core system. And that core system essentially is about customers record, accounting, processing, data processing, and product processes. Now, the product processes maybe historically has been not that, didn't have much change. So either you're a saving product or a checking account or a mutual fund, it's very standard product set. Hence, core banking had those products set already built in. But the market is innovating very fast. They're coming with new business model, new way of lending, new way of wealth advisory, new way of structuring products. So how do you keep up with these things? And this changes brings a couple of issues. One is the policy, as you said, that how do we ensure that a certain business model banks want to adopt or certain product banks want to deploy, they have the regulatory barrier, or they are perceived, at least they perceive there's a regulatory barrier. They're going to get regulators' approval to do this product. Then comes the technology barrier. Whether the technology company would like to go and bring a third-party product, yes or no. There are procurement issues, there are technology issues around that. Then comes the issue around how to ensure that the market itself does it have that stability to provide such services. So we have this multiple issue which is creating this challenge of how to move forward. From a policy standpoint, I think many regulators have figured out that they would not like to regulate systems. They want to regulate business activities. So that's the reason they don't recommend systems to any FI to use as part of the policy choices, but they regulate business activities. So the sandbox, which many banks, central bank talk about, are essentially designed where a particular bank brings a particular tech company, come to this regulator and tells, look, I want to deploy this new product and services. I am not sure the existing policies are clear on this particular product and services. Can I get an exception for 6 months and try this product? And then I will fully comply to the regulation. And that's what the sandbox does. It allows the regulators and the market participant to understand any new risk which comes with this new model. And after that, there's a policy stance changed by the regulator and becomes a level playing field for everybody. So that's the regulatory sandbox, how it helps them in the process of innovation. There's also a need for a public sandbox because not every deployment issue is a policy issue. There are risk management issues coming with new technology. For that, you go to a public sandbox. In Singapore, we have a public sandbox called AP Exchange, where you participate, collaborate, look at the product, and I said, look, win-wins between bank and the tech company and startup, and somehow figure out how to deploy this and get over the tech risk part. And so that's how the policies sandbox all connect together. Now, the real elephant in the room is actually, to me, who have been a traditional barrier to FI's innovation are the large tech providers themselves. And I think they have registered this change of smaller company or a boutique fintech company are almost like a piranhas trying to eat their revenue stream. So I think one way you can keep resisting that. Other way is that you build an architecture and encourage all these companies to plug into you. And then you create the necessary capital incentive. So you not only have a solution for your client, but also participate in the equity growth of those fintechs whom you are getting them to plug into the network. So it's a win-win game for both parties. I'm sure fintechs will be far more happy to join FIS network so that they get both the equity side as well as the client side and both the party have economic gain behind this. I think perhaps that is a much more elegant model where the core system like FIS can decide who should be plugging in. Then you can be almost like today, you like a refrigerator, you go and buy it. After 10 years, after 5 years, it becomes outdated, you get a new refrigerator. But you don't have to build that refrigerator in your home every time there's a change. So you got to build that structure. And when there is a policy conflict, when there is a infrastructure conflict, then you talk to public policy makers like ourselves, or you engage with the market to think about common infrastructure like India does for setting up account aggregators, India Stack, and all those things. I think you are you to unmute.
Sorry. The subsequent question to that is, there are newer areas like crypto, Web3, creator economy, which is more decentralized, newer fabrics which are coming in. Now, have you seen use of these sandboxes in these new areas to test out these experimentations and then establish the more stable ecosystem to give more assurance to the startups that no, things are going to be more clearer? And what is your view about crypto itself and how exactly Singapore is addressing that, and how exactly the APAC overall, where you see more traction, where you see more need of improvement, and that's something which is interesting area as well.
Well, crypto is a little more interesting because it is beyond an existing policy gap. So the sandbox are designed for existing asset class. An asset class for is it insurance, or it is trade finance, or the wealth management, consumer banking, their existing asset class. The sandboxes are designed to deal with innovation or change request or change in a policy stance for existing product lines or asset lines. That's how we define sandbox. Crypto is neither an existing asset class, nor it is changing a status quo. It is a complete new asset class, is a complete new product set, which may change everything we think today as a banking services. So sandbox traditionally don't apply to crypto areas because they're not designed for such things. The way to approach sandbox is the way to approach crypto, and which Singapore has been doing in bits and pieces, is to encourage public-private partnership in building projects, which is designed with a use case in mind, and there both the policies and the technology are deployed, and it is observed over 2-3 years of time to see where it goes, what it exactly solves for, and what are the policy issues which comes with that. Example, Singapore's Project Ubin, Project Guardian. There are many such projects in Singapore which focuses on a whole range of technology being used, the Web 3.0 technology being used for capital market, for digital currencies, stable coins, crypto coins, private currencies. So there's a whole set of experiments that are happening in this space. Primarily POCs, pilots, large corporate programs, and also something has come out of it. In Singapore, Project Ubin, it took us 4 years to build or to go through multiple phases. It led to creation of a company called Partio, which JP Morgan, DBS, and Temasek invested on. Similarly, you'll see most of the examples coming as this experiments hits the street. Also, same time, Singapore and many regulators are issuing licenses to the crypto players in terms of payment licenses. So you are seeing 2 or 3 variables moving. You are seeing some experiments in the space. There are some licenses where there are some issues in the ecosystem itself, speculation going, scamsters are playing havoc in many markets. Sometimes serious players like JP Morgan, Bank of America, Citibank, DBS are taking some of the underlying technology of crypto technology and also thinking of upgrading their own infrastructure, whether through middle office simplification or the back office simplification, or finding a new way of delivering products and services. So you are seeing that also happening. Now, in the world of crypto, maybe I'll change. Maybe let me reframe this. Then there are a whole set of assets which we know traditionally are called physical assets, whether it is cash, it is property, it is financial assets, or a trade finance assets, bill of lading, all these things, or assets which commodities. land, agriculture. So the whole set of assets today we see. Now, this asset can be digitally represented in the digital currency space as a digital assets. And to do that, you need a decentralized network called blockchain or DLT, where two parties can send these assets from one point to other point with both the money, value, ownership, all embedded in a single instrument. And there's a consensus protocol which transfer this thing. Now, this is a complete different mechanism of, again, as today we have, where the asset ownership is through an intermediary, through a governance process, through a regulatory process, through a compliance process, and there's a transfer of money happens from the bank against that asset transfer, and that two distinct process. But the world is collapsing to a single process where the transfer of asset ownership and the payments is happening in a single structure called digital asset. Now that is foundationally changing everything we know today. So it will take some time. A lot of this will come through use cases. In my mind, 4 use cases which will drive a lot of this outcome. One is in the payment side, second on the capital market side, third will be on trade finance side, fourth will be on ESG or new areas for sustainable resourcing, carbon points and other carbon or offset points. So all this will be part of this new asset class, and they'll have a new technology architecture, a new framework for regulations, because they're decentralized. The governance models are quite different there.
So, Sopnendu, we have many of the partners and startups today in this forum who have been listening, and a couple of questions were coming in. And one of the questions that came yesterday also, I think, repeated here today, which is about multiple startups in the Web3 are into more about public blockchain areas, and they're working in experimentation with newer DeFi protocols, newer creator economy and everything. And but they don't. They want to understand how the institutionals are treating public blockchains, and is there any thought process behind whether they prefer more public or more permission blockchains where they trust the smart contract as well as the ecosystem, and KYC and other areas come in picture. So how do you, what will be your messaging to the startups who have started their journey, probably very young and very creative, but they're getting tractions and TVLs which are very low right now in retail area, more kind of individual kind of participation. But if they want to attract an institutional liquidity in this areas, will permission blockchain will be better to go along, or they can still go with the public and then do their. So what are the knobs that they need to fine tune to enter into the institutional businesses from where they are?
Well, public blockchain, well, it is the reason why a lot of people went to that space, because I think my sense is the promise of a change and the change happening of time, the timing of the change went ahead of the market reality. I would not be so optimistic of that things will change tomorrow, because this is a foundational shift of moving from a governance-led process where there's a central governance for everything we do, and then there is this set of intermediaries who run the tech stack and people participate. Now we are talking of a very different architecture where there are nodes and there are market participants who can then not only issue, buy assets, also issue assets, and they are governed by their own automated rules. And there is a cryptocurrency which is backing this platform through incentives being given to people who are doing the protocols, verifications. Now, that's the ecosystem, but that ecosystem very idealistic. It is largely within the imagination of software programmers and bunch of enthusiastic. And that's the reality. That's the reason why you see so much of froth here. But good news here is that some of this thinking and infrastructure has gone to the mainstream, but somehow I think because of lack of uncertainty, they prefer to get a permissioned ledger, which to me is not decentralized ledger technology. It is distributed ledger technology now. There's a switch, because decentralized is where your governance is decentralized. And that is what a blockchain looks like. But this is also a DLT, but it's distributed. But the governance has been distributed by the consortium members, few of them, and that's how they're running it. So a permission ledger makes makes the narrative away from blockchain to a DLT. Here I refer it as a distributed ledger technology. Now, some elements of the blockchain technology or the previous Web3 stack are being used here, especially when it comes to cryptography, smart contracts, and the consensus protocol itself. Because some of the protocols being adopted in this constraint or in a closed loop are not necessarily a proof of work anymore, because it takes time. Incentives are very difficult to dispense to these participants. So my suggestion to the young startups would be that you should start with the use case, define the problem, go with that problem and talk to those potential clients who should recognize that problem, at least recognize. Then you demonstrate through your Web 3.0 architecture why this is better and solve the problem, and do clearly articulate what are the policy changes they have to make it work, so that there is a pathway to real economic need rather than an imaginary problem you're trying to solve. Because what has happened in the market, all the coins which are issued against a particular project has divorced that coin. The coin has divorced from the project intent, and the coin has taken a life of its own and is getting speculated for reasons nobody knows. So having this effect of the currencies separated from the project and getting into a speculative track has actually destroyed the innovation in this space. So the few scamsters, the few speculative Bitcoin, crypto coin chaps have destroyed the progress of Web 3.0 technology going forward. I think there are a lot of regulators trying to clamp down on these bad actors so that the real technology progress can happen. Of course, I do believe that eventually this cryptocurrencies, which is being used to create this digital asset, will have its own value. It may have its own exchanges. It may have its own market value, which is growing because they're useful. But that is related and linked to a real economic activity and real value. So once that happens, I think market will get far more stable and relevant, but the technology also take much more mainstream and get adopted as a new architecture. But because of the distraction of this bunch of people who want to speculate on this absolutely mindless, meaningless crypto asset, has in a way come against the growth of this technology. Hence, the startups have very little chance of succeeding as of today.
Thank you, Sopnendu. This is a wonderful insight there. Now, one other area that seems to be more uncertain or non-standardized is ESG. So in the sense, the standards are not yet set. There is still evolution happening, and there is no, there is a lot of innovation there. But if you have to give your view about when exactly this space may reach to some level where there is some level of certainty in standards and some level of maturity, and then they will see some kind of a real and certain value out of this, and that too something which is combining the technology stack appropriately, combining DLT, combining the AI to it, and then creating something which is more certain, meaningful. Maybe it's already happening, but what's your view about it?
Maybe I thought, I don't know whether it's possible now. I was doing some slide. I don't know that I can show a slide.
Yes, you can. Yeah.
So let me see whether I can.
So Monica, you're there, right? So
yes.
Yeah.
Okay. Share application, I guess.
Yes.
PowerPoint. Share. Okay. You can see, right?
Yes, we can see that. Yeah.
So this is an architect. I was giving I was actually sharing this in a speech yesterday. Maybe the way to do this is, yeah. I think the ESG world today, if you think from a tech perspective, there's three big need. There is a need to mobilize capital, and that capital means how do banks make investment or financing decisions and able to sell new product under this green financing or ESG financing conditions. Second, how do banks, when they do such lending, do their voluntary or regulatory reporting, so that, and also they have to ensure that the people they have lent it to also are able to demonstrate on almost constantly or regularly through data that they're actually staying true to their commitment for the ESG goals against which they borrowed money. And the third is more macro, where these banks can report and quantify the impact they're making in the ESG journey. And if you look at the horizontal layer, there is this need, as you rightly said, we've got to ensure from an enabler perspective, the definition taxonomies are getting right. The disclosures are essential, because the borrowers have to make certain disclosures so that the risk and opportunities can be measured appropriate in the right way. Plus, we need to have technology which can provide data sets and metrics, so that because such data will be coming in huge number and from various sources from different locations. How do you measure this data and source this data to make it work? In our mind, I think this is how an ESG digital architecture should look like. There should be, and that's why it's not a problem which a tech company can solve for. A tech company actually comes somewhere in the top, but before that, some foundational rail has to be established. You have to start setting up priority sectorial systems, which can be rubber, aquaculture, palm oil, construction, transportation, maritime, and many things. Then we should have a set of ESG data sources based on certain taxonomy across different data provider, disclosures, utilities supporting these sectors. And there are certifications which the sectors themselves go through to comply to ESG requirement. And all this get pumped into three key tech stack or tech platforms. One is the disclosure portal, where you get access to data. And there's an orchestrator where you can use this data orchestrator to pull other data, structured and unstructured data, to do further analysis upstream. And the registry allows that each company to register that data provenance, can be certificate, data sets as something to be trusted and can be verified. All these three market platforms pump something we call as a common marketplace, where different APIs will be provided. And then fintech solutions tech company can use these APIs to look at different ways to provide disclosure solutions, different software services for impact investing and risk management, and also a direct services by the core banking product producer, core banking software vendors who can then use this as a way to upgrade the credit financing and the underwriting software which they have today in their existing tech stack. So I thought this is something answers to your question.
Absolutely, Sopnendu. This is wonderful insights on the ESG. You were talking about data, and one of the last topics toward the end is the key and heart of the entire discussion, which is data regulations. Now, data has been used left and right by corporations and big companies as they want, as they like, and then abused in certain cases. And then the ownership of data with the individual is something which is critical, and they did not realize that, or the common person did not realize that that data is so valuable. And now with Web3 and other areas, they're able to understand that that is a potential monetization capability there. And then consent-based mechanisms that are coming up, which where I give consent my individual data and then get more out of it, and then aggregation between various institutions on the data. So with that context, like ESG is just one of the use case when you build on top of the data. So what is your view about the regulatory frameworks around data, and are they mature enough to build on top of? Because today, some of the countries have this very mature framework, some of the countries are evolving towards it, but there is definitely a need to ensure that data becomes the key and the foundation of the entire the fintech innovation ecosystem. So any views on that area?
Well, I mean, that is quite implicit, quite self-evident that we need data for tech to run and to produce products and services. And now the data explosion had to have come to a point where means maybe we'll go back to some slide I've got if it helps to let me see if I can go back. Yeah. Now if there's a slide which I was using yesterday, let's see if it's still there. Hmm. If you think this as a picture, so you see that the transition which moves from open banking to open finance to open economy and with open data out there. Now, each of them kind of as an end state comes to this huge need that we got to have a whole set of data opened up to transit between. Today, if I have to think, most of the FIs and tech companies are somewhere between closed banking and open banking. Very few people have gone to open finance. That's still and open economy is still way further downstream. Okay, so that's where we are. And to facilitate this whole transition, you need to have infrastructure, policy considerations, and which will allow a responsible access to data. India has just went live, I think, last week on this whole data aggregator portal. Many countries are doing that, but there's also a policy choices to be made: domestic data versus cross-border data. And let's say to to make it easier, let's only talk about domestic data. Within domestic data, there has to be a thoughtful policy infrastructure and regulatory governance around how people use data, how people share data. And the crux of the problem lies, a solution to that lies on how we can empower individuals to be giving consent to the data. And to do that, I think in my mind, like we have a banking app, we should have a data app with our own credentials, our own data, which is verified, sits in that app. Then we should be in a position to able to send the data to third-party providers for whatever services they're providing, and have an ability to know what they're providing against the data they're using. As against today, you don't know where they're pulling the data from, where the data is sitting, and the lack of clarity between consumer and the policymakers and the data service provider on this whole space. So I think we're trying to, governments are trying to first come with a privacy framework. Sometimes it runs ahead of the capabilities, sometimes it runs ahead of the opportunity or missed opportunity because of this current policies. So I think still we are in this process of moving. There is, I think, good news is, at least in India case, for example, they just put a hold, or I don't know, they put a hold or they stopped the data bill last 2 weeks back, and they're rethinking that whole space. So many countries will have to rethink this whole data space because things have changed, technology has changed, opportunity has changed. And post-COVID, the global supply chain has collapsed. So there's a need to rethink how data is being used, processed, and stored and tracked. I'm hoping next 1 to 2 years, you get more clarity. But the good news is also, countries like India are opening up platforms like data aggregator. In Singapore, we have SG Fintechs and many such, and our SyncPass, which allows some of the data to be shared, and then third party can provide services on top of that. So so to me, that's the transition from open banking to open finance to open data. And for open data is where the government has to step up through utilities to provide that access to data.
Thanks, Sopnendu. One of the things that you mentioned about, which is consent basis for individuals, but you mentioned about the project, which is collaboration between banks to aggregate the data and create new intelligence out of that. Can you tell us something about this, and how was this even possible? Because institutions were very reluctant, or are very reluctant, to share such kind of a data. So on what frameworks on a very high level this was made possible?
This is in Singapore, right?
Yes, yes.
Yeah. So in Singapore, we have followed the principle of we have followed the principle of what I call that every participant must be able to share and must be able to consume data, which means this gateway where the banks participated, they provided this opportunity for consumers who can authorize through consent that from these 6 banks where I have an holding, the target bank can pull the data and give me consolidated wealth advisory services. So we could bring all the participants, and we told them all of them have equal right to see the data, and all have equal obligation to share the data. So the banks participated, MAS put together a governance framework, our IMD or our GovTech infrastructure put a gateway, and banks connected their APIs, and that's how the data moves. We are now adding on top of the banks, insurance company, government data set. Hopefully, as we mature, we'll also add fintechs to provide, but we'll follow the principle of that anybody who participate also has to contribute data. Well, it may not be 100% foolproof process, because many fintechs may not have data themselves, but they have great models and tech to provide insights. In that case, those fintechs should collaborate with another FIs, so that then they in turn can provide that services to the client. We also have opened a small gateway for third party with customer consent to download PDF files of consolidated data and pass it to fintechs who can process it and provide advisories if they need to. So we have put this as a work in progress. It's working well. Thousands of people are now doing consolidated wealth advisory through this consolidated data platforms.
So Sopnendu, one last question of the session now. And this question was repeated yesterday, and quite interesting one. So the data has a lot of issues when we are collaborating, aggregating data, because of the consent and other areas that we need to put in place. But there are certain startups which are in the area where they don't actually share the data, but the intelligence which is derived from that data. So they ask questions to the data, and these questions are framed and have some kind of or expected to have some kind of regulatory framework on top of that. So it's kind of a flow or certified questions that we can ask, and that consent is linked to the question. And instead of sharing the data, people are more comfortable saying that, yes, my data can be used in this way to derive this information. And there is some intelligence of that which is kind of aggregated and shared. So do you see innovations happening which are relevant in the market here, which probably may bypass all the complexity that happens when you have data and you have to share it as is in changed shape and forms? Maybe somewhere it can be homomorphically encrypted, and then AI models can train on that, or certain decisions can be shared. And that's where some sections of the startups are working on those areas, and they would like to hear about your views about whether data consolidation, aggregation, and sharing is one area, or there is another area top of that which is much more easier or maybe much more straightforward, where only decisions which are relevant with that consent can be approved by some certified flows and then shared. So any view on this layer above this data sharing, which will be what potentially have less questions from people around how that data is really getting used, how long that data is going to stay with a third party, etc.?
I think there are some thoughts around that. If the entity is creating their own insights by processing primary data source, that should be the property of that particular entity. I think people should start thinking about labeling the data, the primary data for insightful data. I think the most privacy discussions are around primary data set, which is my name, my date of birth, my asset holdings, whatever, which is attributable as a primary data set about my financial holding, my social status, and my personal status. Now, if somebody through intelligent question are creating insightful data personality about myself, I think that stays on that with that entity as their intellectual property, and they can use that data set, which is insightful. It's inside data to provide a certain services. I don't see that as a part of the primary data source, because the challenge with that is that when you are passing this primary data source, you still passing off. If you're transmitting this primary insightful data about a certain individual, but that data itself has no identity, then you have to rely on a primary data source. Then you combine together and then you transmit. I think at that point of time, you got to have a consent. When you're connecting a primary data source to your insightful data, and I think consent is required, and you can't avoid that.
Right. So I was more talking about the consent plus the attribute about how that consent, because right now the consent is there, but it is there for the raw data sharing. And that
Yes,
is where
primary data, primary.
data. Yeah,
Yeah.
exactly. If I say that, yes, I would like to share my decisions about my data to third party instead of data itself, then I feel more at peace. And I know that the data itself is not shared, but the data is questioned, and those questions are refined for dispersing a lending.
I think most of the data privacy bill have stayed away from those data set.
Okay.
Of if a certain institution has identified me as a level 4 risk appetite, and that there's a data which says what is my risk appetite in my bank, which is the 4. Now, is that data private data? Answer is no. That data can be shared with somebody without necessarily touching the primary data set. Yeah, I mean I don't think privacy regulators have touched that piece, and I don't think there is a practical way to capture that and control that. It's difficult. It's just not possible. Impossible.
Thank you, Sopnendu. So thanks again for your time today. We took a quite nice and in-depth journey from how MS Innovation is promoting the APAC as well as Singapore innovation ecosystem. Startups are flourishing around those fintech ecosystems, and RegTech specifically and the sandboxes, how they're helping to establish and gain confidence in these new models. And then we saw the crypto and institutional adoption of crypto, and in which areas they will be, and we dovetail into the ESG and then data and then the institutional side of data aggregation as well as consent base. It was a wonderful journey, Sopnendu, with you, and I'm sure that the startups have takeaways, thousands of takeaways from this short discussion. And on behalf of FIS and all the startups, I'd like to again thank you for your participation today, and looking forward for future interactions and collaborations from FIS.
Thank you. Thanks for having me. Thanks for having me.